Thanks very much, Tim, and thank you to all attending. Good to be here again. So as Tim mentioned, European Metals is developing the Synovitz lithium project in the Czech Republic. It's the largest hard rock lithium resource in Europe. Thank you to Steve, the first presenter, for setting the scene, I think, for lithium and the supply-demand equation. I think what's evident is this metal is in deficit. It's likely to be in deficit for some years to come. And nowhere in the world is that more evident than in Europe, where we operate. Europe, one of the largest consumers of lithium in the world, with no production of lithium whatsoever in Europe at all. So that's the basis for our offering. As you see from this first slide, we will be developing a fully integrated lithium project, that is the mine and the processing plant. So our end product is not a concentrate, not like your spodumene concentrate producers here in Western Australia, but our end product will be battery-grade lithium hydroxide and/or battery-grade lithium carbonate sold directly into the battery industry. I mentioned it's the largest hard rock lithium resource in Europe. That's important for a number of reasons. Long-term security of supply, for example, and that's becoming more and more important. The access to local supply chains is becoming economically and politically important, and COVID focused the world's attention on that in a large way. The project has very compelling economics. We updated our most recent preliminary feasibility study last week. You can see the numbers there on the screen, nearly $2 billion after-tax NPV in US dollars, and an after-tax IRR of 36%. So very, very compelling. We'll be producing just under 30,000 tonnes per annum of battery-grade lithium hydroxide and/or the carbonate equivalent. We have three very important and large partners working with us in the project that are listed there for you. And very importantly, the project has very, very strong ESG credentials that I'll touch on in a moment. The project is funded to final investment decision expected later this year. We can move on to the next slide, please. I mentioned the EU, and this is very important for us. The European Union has committed fully to a battery industry. They have committed fully to an electric vehicle future. And it's starting to realize now that they need to develop the critical raw materials to go into those batteries to feed those electric vehicles. So this has become very important for us, and the support we're receiving from the EU in developing the project is significant. Next slide, please. And these are some of the reasons why the EU is so committed to this. This is how many EVs are being sold in key European markets currently. So just in last month, you can see the numbers there. So we're in some markets upwards of 50% of all the vehicles sold on a monthly basis are some form of electric vehicle. So you can see that this groundswell is well and truly taking hold in Europe. It makes sense. It's a densely populated region. So rolling out infrastructure for charging EVs, etc., is comparatively cheap. This is one of the reasons why the EU is so committed to this thematic. As you'll see from the next slide, Norway, for example, 90% market share of electric vehicles now in Norway. Yes, it's a much smaller market, but this is an indication of where those bigger European markets are going. And on the next slide, these are the forecasts for the growth in electric vehicles in Europe out to an enormous 39 million vehicles by 2030. So the lithium for these vehicles doesn't exist, for the batteries to go into these vehicles, and it needs to be developed. A lot of lithium projects need to come on stream in a very short period of time. Next, please. And further, the supply-demand equation for lithium is evident there for you. And that's why we've seen such a significant kick up in the lithium price over the last, well, really the last year, but very notably over the last couple of months. And next, please. So I mentioned that Synovitz is a very large lithium resource. In fact, it accounts for over 65% of all of the hard rock lithium resources in Europe. So this is important because it focuses the attention of the governments of the EU on assisting us in developing the Synovitz project. The location on the next slide. So this is becoming a very, very busy slide. These are all the battery factories being built or in advanced planning in the region. And you can see that there are many, many battery factories being built. to feed all of those 39 million electric vehicles that are going to be driving around on European roads in only 8 years' time. So if you added together all the capacity of these battery plants now, it's more than 25% greater than the total amount of lithium consumed in the world back in 2020. So that gives you some idea of the increase in demand that we're seeing. Next slide, please. I'm moving through these slides quite quickly. Obviously, we're time constrained, but the full deck is available on our website. Please go and have a look, and you'll get much more information there. I mentioned that the project has a very positive ESG profile. This is clearly becoming more and more important for all mining projects globally, but particularly for something like battery metals. Some of the keys here: Synovix is a historic underground tin mine. So our impact on the environment, our impact on the community is very minimal. You know, we're not breaking new ground. We're not trying to dig an open pit. Existing underground mine that we will simply be re-entering goes a long way to improving our ESG credentials, particularly with regards to social and environmental factors. We will be feeding the plant with solar power. Our project level partner is the Czech national electricity provider. So they've committed to providing green energy to the project, and that's most likely solar power. They already have more than enough capacity of solar power in the region to easily account for what we'll draw at Synovix. Other factors: the process we use is a single low temperature roast, much less energy consumptive than traditional spodumene roasts. This saves money, but it also saves greenhouse gas emissions, which leads to our greenhouse emissions being potentially as low as any hard rock lithium resource in the world. And I'll show you a slide on that shortly. We'll also be recycling a significant number of our key reagents. We are in an area that has been transformed from an old coal mining area into green energy. That's also very important as coal mines are being shut down right across Eastern Europe. Next slide, please. And here's the decarbonisation case. We released this information to the market a couple of months ago. You can see from the second bar chart there that Synovix does have the potential to be one of the lowest, if not the lowest, CO2 emitter of all hard rock lithium projects globally. This is just on the CO2 emissions, on the global warming potential. We also score very well on water consumption, which is obviously an issue for brine producers. And we also score very well on acidification. And acid is used in a lot of other process routes for producing lithium, notably from spodumene. Next slide, please. I mentioned our strategic partnerships. They're very important to us. Czech, the national power utility in the Czech Republic, very large company, about a 14 billion, 15 billion euro market capitalisation. They own the grid. They own all of the electric vehicle charging stations throughout the Czech Republic, and they've been moving away from coal mining and towards green energy for some years now. So very important for us to have Czech involved. The European Institute of Innovation and Technology is a European Union official body. They are the chief facilitators of the European Battery Alliance. They're involved heavily with us in terms of introducing us to potential financing for the project. European banks, central banks, as well as commercial banks. They're also involved in assisting us navigate the European Union grant scheme, and there are significant funds available for projects like us under the various European Union grant schemes. And thirdly, the SMS Group is a very large German private company who are conducting our definitive feasibility studies. Very important to have SMS involved because they too are very well connected with European banks, particularly the German banks. And on to the next one, please. I mentioned the PFS update that we put out just last week, producing nearly 30,000 tonnes of battery-grade lithium hydroxide. That becomes a globally significant producer at 30,000 tonnes. There is potential for us to take that higher. That 30,000 tonnes per annum utilises less than 10% of the overall resource over 25 years. So we will look at increasing that production, but 30,000 tonnes in itself is significant. We can do that for an all-in net cost per tonne of lithium hydroxide of about $5,500 US dollars. And that versus a current lithium hydroxide price of north of 50,000 tonnes per annum gives you some idea of the potential upside in this project. The 50,000 tonnes is perhaps $50,000 is perhaps an outlier. You know, in the PFS that we released last week, we used 17,000 as a long-term lithium price, but I feel that price is probably quite conservative. As I said, the NPV of this project in US dollars after tax is nearly 2 billion. Our share of that is about half, or about 1.3 billion Australian dollars, versus our market cap of 250 or 260 million Australian dollars. Gives some indication of the potential upside in the value of our securities. We do have a disconnect right now with a decrease in the price of most lithium equities against obviously very strong increases in the price for the underlying metal, for lithium. And I think when we see these markets settle down, you're likely to see a gap up in prices of many high quality lithium stocks. Next page, please. We're putting together a world-class team to develop this project. This is the European Metals side of that team. Obviously, as I mentioned, we have our in-country partner, CHES, who employ some 32,000 people. So clearly they have some significant human resources as well. And we'll be building out that team over the rest of this year as we move towards final investment decision. And the next slide, please. That's the website's there. We are listed, as you can see from this slide, ASX, also in London, also in NASDAQ. We have a NASDAQ American Depository share, and we're also listed on the Frankfurt Exchange. Our website is at the bottom of the page there. Please visit and have a look at the full presentation and a lot more information that's there. Thank you all very much for your time.
Thanks, Keith. A question here, you hold the largest hard rock deposit in Europe, where the lithium is kind of found in clays rather than silicates as they are in Australia. As there's no lithium currently produced from this rock type, can you talk to the methods used to extract the lithium?
Well, Tim, it's actually a common misperception that there is no lithium produced from this rock type. Zimbaldite, which is our host rock, it's a type of lepidolite. Yes, it varies. It differs from some lepidolites in it's got a much higher iron content, which is actually an advantage to us that I'll touch on in a moment. But lithium is produced from other lepidolites. Notably in China, there's at least 4 producers of lithium carbonate in China. They're private companies, which is why they're not well known and why this misconception exists. But it is being done. With Zimbaldite, as I mentioned, the high iron content assists us because it enables us to use wet magnetic separation in the first stage of our process. That's a very simple process. And through the use of that wet magnetic separation, we extract all of the tin and tungsten credits. I mentioned earlier that Synovix is a historic tin mine. It's still one of the largest undeveloped tin resources in the world. There's about 270,000 tonnes of contained tin in our JORC resource. And the price of tin, as the price of lithium has, the price of tin has increased dramatically over 2021. We modelled $26,000 a tonne in that PFS update last week for tin. It's actually trading at more like $40,000 to $42,000 a tonne at the moment. So the tin credits are very important to us, and being able to extract them easily is a distinct advantage.
And your JV partner, which is the Czech National Power Company, what are the most significant benefits they bring to the project?
Well, they've been operating in the Czech Republic since it became a country, since the wall came down in 1989. The CHES has been developing the country's power resources and coal mining. So they have experience in mining, obviously, albeit coal, and they're moving away from that, as I stressed. But they have 30 years of history of operating in the country, 30 plus years, which means they know how to permit mining, how to permit processing plants and easements and all these sorts of things. And that's very, very important to us. CHES is also owned 70% by the Czech government. It is a publicly listed company, but 70% owned by the Czech government. And they have announced a joint venture between CHES and the Czech government to build a battery factory about 50 kilometres from our project. So clearly there would be a very good chance that CHES and the Czech government would become an off-taker, a customer of Synovets, and ultimately buy some of our carbonate or hydroxide.
And of course, the other piece of the picture there in Czechoslovakia is you've got SKODA, which is obviously a subsidiary of VW and one of the biggest, or plans to be one of the biggest EV producers in Europe by the end of the decade. Can you talk to how all these pieces could potentially come together for European metals?
Well, you're right. SKODA is owned now by VW, but I can assure you in the Czech Republic, it's still very much considered to be the Czech car, and they're very patriotic, the Czechs. VW has announced significant EV plans, as I'm sure you're aware. And this also includes their commitment to build 6 battery factories of their own throughout Europe. So we are in the mix, or the Czech Republic is in the mix, to be the first of those, or the next announced of those VW battery factories. And they are talking about building 40 gigawatt hour battery factories, which would consume about 30 to 33,000 tonnes per annum of battery grade lithium hydroxide, or about what our project will produce in phase 1. So it is possible, and it has been explored in Czech media. It is possible that VW SKODA could become a partner in the battery factory that I mentioned earlier, that's currently been announced between CHES and the Czech government. When they announced that battery factory, they did state that there would be a third partner in it, and that partner would likely be an auto/battery maker. So it is possible that VW SKODA could become a partner in that project, which, you know, by extension would mean that it would be likely that they would become an off-taker to the Synovets project as well.